Welcome to our tutorial on how to invest in stocks for beginners in India. In this video, we will walk you through the basics of stock market investing in India, including what stocks are, how they work, and how to get started investing in them. Whether you're new to investing or just looking to brush up on your knowledge, this video is for you. First, let's define what stocks are. Simply put, a stock represents a share in the ownership of a company and constitutes a claim on part of the company's assets and earnings. There are two types of stock, common and preferred. Common stock usually entitles the holder to vote at shareholder meetings and to receive dividends. Preferred stock, meanwhile, does not usually have voting rights but has a higher claim on assets and earnings. The stock market in India is primarily made up of two exchanges, the Bombay Stock Exchange, BSE, and the National Stock Exchange, NSE. These exchanges allow investors to buy and sell stocks in Indian companies. When you buy a stock, you are buying a small piece of ownership in a company. As the company grows and becomes more valuable, so too does your stock. Conversely, if the company struggles, your stock may decrease in value. Before you start investing in stocks, it's important to understand the different types of stock market analysis. There are two main types: fundamental analysis and technical analysis. Fundamental analysis involves looking at a company's financials and overall health, while technical analysis involves studying charts and patterns to predict future stock performance. 4. To begin investing in stocks in India, you will need to open a trading and demat account with a broker. There are many online brokers to choose from in India such as Zerodha, Angel Broking, and ICICI Direct. Once you have set up your account, you can deposit money and start buying and selling stocks. When choosing which stocks to invest in, it's important to diversify your portfolio. This means investing in a mix of companies across different industries and sectors, as well as different types of stocks, e.g. blue chip stocks, growth stocks, etc. Diversifying your portfolio can help to minimize risk and maximize potential gains. Another important aspect of investing in stocks is monitoring your investments and keeping an eye on market trends. Keep track of your portfolio's performance and consider rebalancing it as needed. Additionally, it is important to have a long-term perspective when investing in stocks. It takes time for investments to grow. It is important to note that the Indian stock market has different regulations compared to other countries. For example, foreign portfolio investors, FPIs, have different regulations and limits to invest in the Indian stock market. Investing in stocks can be a great way to build wealth over time, but it's important to understand the basics and to approach it with a long-term mindset. Remember to diversify your portfolio, monitor your investments, and seek advice from a financial professional if needed. It is also important to be aware of the regulations specific to the Indian stock market. Thanks for watching.